Hey traders, John Howell here. So today what I want to do right now is I want to walk you through why I personally, hope you guys can hear me okay, why I personally don't use indicators anymore and why you shouldn't as well. So I'm going to walk you through what's happened to me and when it comes to your long-term success in the markets. And that's exactly what I want to talk to you about in today's video. So what I want to start off with in today's video is I want to talk to you about your foundations to you getting ahead of the markets, okay? And the truth about what it takes to have a successful year in the markets. See, trading is actually quite a difficult process, right? There's a lot of things that goes into you becoming a good trader. It's not a matter of joining a coaching program or looking at an indicator, right? There's a lot of things that you're becoming a good trader. And one thing that I really want to sort of encourage you to do is when you look at your entire year as a trader, one thing you'll realize and you'll start to realize is that there are months where you're going to be really active, okay? And there's going to be some really good trades, okay? And there's going to be months where you might not be active at all, right? It might be the activity might be very low. And that's the ebbs and flows of an actual trader in the markets. That's what happens, right? So one thing that I have realized when it comes down to my personal trading is this. I realized that if I want to make, say, a six-figure year income from trading, what does that realistically look like? It realistically looks like that probably 20 to 30% of the months are going to make up probably 80% of that income. 20 to 30% of the months, right? So maybe 2 or 3 or 4 of those months are going to be really, really good months, and the rest are going to be sprinkled throughout the months. See, and once I understand that, and once I understood that, one thing that really helped me when it comes to my personal trading is that I understand that, okay? The thinking that some people have is that I'm trying to make a weekly income from trading. It doesn't work like that. Right? Trying to make a monthly income from trading, right? I'm trying to make a certain amount of money every single month. Trading doesn't work like that. Now, over a period of 12 months, one thing that I have found is this, is that if you look at it from a scale of things, okay, it is much easier to make a six-figure year income than it is a $2,000 per week income. Now, it's the same thing, right? Right? You've got $8,000 a month, $100,000 a year, right? So I want to start off with the video when it comes to this here is because I want to share with you some things that's really helped me when it comes to this. And one of the things I realized is that if I want to start to elevate my success in the markets and have the best chance of actually doing well out of trading, then I need to have the ability to have some big profits. And so I had to have a hard look at myself about how I'm actually trading the markets. And so when I started to look at the markets as in like I was trying to make big profits, one thing that you're looking at the screen right now, right? This is how I used to trade. I used to trade a lot doing exactly this here. Is I used to use these indicators here. I've got a Bollinger Band here. I've got a couple of moving averages. I've got a double stochastic here. And I've got also the RSI here as well too, and the volume and all that sort of stuff. Now, one thing that I realize when it comes to these moving averages and these indicators is what? They're very short-term swings, right? So if I was trying to capitalize on a move that might last a few weeks, maybe up to like a few months and capitalize on a good profit to get a growth on my account, I was never capitalizing on that because I was always getting out early when the indicators started getting overbought, right? So you probably are there right now if you're looking at indicators. You're probably seeing that, you know, we have these overbought signs through here and overbought signs through here, right? And so one of the things that I realized is that by me utilizing the indicators, they may help me with some good entry points, but they quickly put the warning bells on of now we're overbought and now we should be looking to get out of this thing. And that was always the biggest thing for me, is that I never had a chance to capitalize on a really big move. So I'll give you a real example here. There was a trade that I did at the start of this year, right, on gold. And the trade that I did was from here. So I got in here and I actually exited up here for that trade that I did on gold, right? Now, I also did another trade recently as well too, and I'll walk you through why I was able to capitalize on that. So here's the thing. As this market was going up through there, guess what was also happening? At the very exact same time, look at this here. Look at the RSI and look at this is the RSI down the bottom, the stochastics here. Look at that. So if you were trying to capitalize on this entire move up here on gold, as an example, look what happened. Round about here is when everything started to what? Started to get overbought and overbought. But what ended up happening at that time? We actually end up what? We end up going for another 12 or so % move to the upside, right? Went from 2,000 to 2,400. And so that's, by me not utilizing the indicators, it allowed me to capitalize on that. And so this is one of the reasons, like, I have found myself that we don't need to use indicators to help us trade really well. We think we do, right? One of the best things for me as when it comes down to your trading is that the number one thing when it comes down to my trading is that if you look at the market as a whole, there are certain patterns that the market makes, and as long as I can get in on that pattern, then we're probably likely to do really well, right? And so, like, for example, even just recently as well too, you probably can see like this point right here. So this point right here, I actually entered in on gold on this bar right here. But if you actually look at the stochastics and the MACD, what were they doing? This was the stochastics up here telling me not to enter. This was the RSI up here telling me not to enter. Why? Because if you were losing that, you're like, oh, everything's overbought, this is going to drop. And then we had a nice rise and I had a nice successful trade out of gold recently. And so as you can see that a lot of the times when the market's we're getting ready to have a nice move for a couple of weeks, sometimes, like for example, this gold trade here lasted 6 weeks. And then I had another trade here just recently. And so as you can see, a lot of the times, one thing I have found to be more powerful than the indicators is the market itself, right? And the number one pattern that I like to trade for myself, and let me just bring this off here, right? And let me just bring up the the actual charts itself. Is the one thing that the number one pattern that I like to personally trade is what's called the L-shaped pattern, right? The market goes up and then the market goes sideways from there. One thing I found is when we start to get this type of pattern, that no matter what the indicators are doing, right, we're getting ready for another nice move to the upside. And so this is the number one pattern. Now, obviously, I have a whole complete trading system around this pattern. This is the main pattern I'm looking for. And I always thought, in the back of my mind, that, man, trading is so hard, trading is so difficult. And one of the reasons why it was hard, one of the reasons why it was difficult was what? Was because I was using these things. These things that I thought that was actually there to help me trade well were the things that stopped me from getting into good trades that did really well. Or either it actually got me out really fast because, oh, well, the indicator's overbought now, the market's likely to drop, and so on and so forth. And so when I'm actually looking at all these markets from here, and I'm looking at all my personal trading, I don't use the indicators anymore, right? Because they're just not good in the markets, right? They really, really, really stop you out, and they really get you out of there. So, for example, another trade that I recently took here was a race trade, right? This breakout here, from here to here, I actually caught a really nice move. I wouldn't have got into this because look what was happening at the exact same time. The stochastics were getting into the overbought section, so was the RSI, and so on and so forth, right? This was actually quite a nice, good short-term move for me, a good, nice trading opportunity, right? And so if you were trying to, one thing that I've found that when it comes to these indicators is it stops you from getting into some nice trades, but also whenever you're trying to really capitalize on a big move, like a really big move, and we're trying to capitalize on a big profits, we have to let the market do its thing. But one thing I've found is that the indicators, just like you're seeing here, these indicators really, really, really get you out, and that they get you out early, and they start to create confusion on what you're looking for. And so this is the reason why, like, I used to trade like this. Now my main trading is like this, which is what? The market and the moving average. Why? Because the market is the most important thing. Without even this moving average, this trade that I did here on this race stock here that I did, it actually mainly came from understanding, just looking at the main pattern here. Once I started simplifying my trading and removing a lot of the indicators, my confusion went down. And once I started to develop a plan, which I do have the way that I personally trade, and if you're looking for a free trading course to teach you this sort of stuff, guys, you have that first link in the description. Or if you'd like to get more like hand holding, like a 12-month coaching with me, you can use the link in the description as well too from there. But one thing that I found when it comes to my personal trading in the last 20 years is that once I started remove the indicators, it became much more simple for me. But once I started to create a plan of the two main things, right? What's the setup I'm looking for, and what's the exact entry bar? Once I started to have, this is exactly what I'm looking for in the setup, and this is the exact bar or exact candle I'm looking to get in on, and it's solid. There started to be less room for confusion of when do I get in? Do I get in now? Do I get out now? Or I'm in a trade right now, or if I get into a trade right now, the RSI is overbought. See, it just creates a lot of confusion, right? And this is where, like, I really see that a lot of these platforms out there with all these indicators, they actually slow you down. They really, really, really slow you down. And that's where, like, my success rate has gone up. My success in the market has gone up from really not using a lot of these indicators, because these indicators were just confusing the hell out of me. Now I've simplified the process to using maybe a couple of different moving averages on the charts. And I use the moving average because it's part of my trading system, right? Part of the trading rules. And once I simplified my trading system to have the exact setup I'm looking for and the exact entry candle, that gives me a powerful, high probability chance of having a nice profit, just like race that I did here just a few weeks ago, and just like gold that I did just recently as well too, right? This is obviously the gold trade. I caught gold. I got in here and I got out up here. And so because of that, my trading is really, really simple. But the pattern and the setup that I use, because it's mainly just based on the markets, it's a massively high probability that we're actually going to get at least a nice move for sometimes up to a few days, sometimes up to a few weeks. And then on the odd occasion, I'll get like a really big move that lasts for like a month or so. So I hope this helps you out. This is one of the reasons, if you're struggling with your trading, I promise you one of the hardest things we're doing is we think by overlaying these indicators, it's actually helping us, but it's creating a lot of confusion in our own trading.